Welcome back to the Deep Dive, your shortcut to being well-informed. Today, we're taking a deep dive into the world of renewable energy, specifically focusing on ACME Solar Holdings, drawing all our insights directly from their recent Q1 FY26 earnings call. Our mission, as always, is to unpack what's truly significant here. We're looking at their latest financial performance, their bold strategic moves into new business segments,
Right.
the broader industry outlook shaping their future, their ambitious growth plans, and of course, how they're navigating the inherent risks in such a dynamic sector. We want to find those interesting nuggets,
Yeah, the aha moments.
Exactly. From surprising financial leaps to the cutting edge of battery technology. So let's jump right in. ACME Solar just reported their Q1 FY26 results, and, well, they are quite impressive. Operationally, they commissioned a hefty 350 megawatts of new projects this quarter. And interestingly, that included their very first 50 milliW wind project. So that's a new piece in their energy mix.
That's right, diversification.
With these additions, their total operational portfolio now stands at 2,890 megawatts. What's the big takeaway from that operational milestone? Especially for an independent power producer, an IPP like ACME.
Well, what's fascinating here is how directly that growing operational capacity translates into financial strength. For an IPP, consistent project commissioning and a growing portfolio like this are the absolute bedrock of their revenue.
Right, it's the core business.
Exactly. The fact that this portfolio is now capable of delivering a steady-state annual EBITDA of 2,250 crores, that's roughly, $270 million US dollars?
Yeah, about that.
With a robust yield of 14–15%, that tells you they're building quality assets that reliably generate strong cash flows. It's a powerful indicator of their project development and operational efficiency.
That's a significant figure, 2,250 crores. And looking at the financials themselves, their total revenue for the quarter hit 584 crores, or about 70 million US dollars. A remarkable 72% increase year on year.
Huge jump.
But what really jumped out at me, though, was their EBITDA, 531 crores, about 64 million US dollars, up 76%, with a truly impressive 91% margin. How does a company in this space even achieve a 91% EBITDA margin? What does that tell you?
Yeah, that 91% margin is it's exceptional, really. And it's a testament to their cost control and efficiency. It's driven by two main factors: their continued capacity growth, which gives you economies of scale.
Makes sense.
And a disciplined reduction in their overall percentage costs. For an IPP, once a project is up and running and the PPA is signed, the recurring operational costs are relatively fixed and, frankly, low compared to the revenue generated.
Okay.
So this high margin indicates they're not just building, but building and operating very leanly, maximizing profit from every unit of energy produced. And their profit after tax, the PAA, also saw a sharp jump to 131 crores, around 15.8 million US dollars, which just reinforces this strong financial picture.
And it's not just about the P&L, right? Their balance sheet seems equally robust. Their net operational debt to EBITDA is 4.2x, comfortably below their guided maximum of 5.5x.
Which is good discipline.
Yeah, that debt to net worth is a very healthy 1.7x. But the metric that really caught my eye was the days of sales outstanding, or DSO. It dropped to just 36 days. Why is that specific improvement so crucial for a company like ACME?
That drop in DSO to 36 days is incredibly important. It signals a fundamental de-risking of their cash flow. See, previously, they might have dealt with a mix of state and central off-takers, basically, who buys their power.
Right, and state utilities can sometimes be slower payers.
Exactly, slower payers. The fact that 86% of their portfolio has now shifted to central off-takers like SEI or NTTC means their receivables are far more reliable and collected much, much faster.
Okay.
For a capital-intensive business like this, robust and predictable cash flow is like oxygen. It fuels new projects, it strengthens their overall financial position. It shows they're not just growing, but growing smarter and more resiliently.
Right, smarter growth. Shifting gears a bit then, these strong financials are clearly enabling ACME Solar to do something quite strategic. They're not just adding more solar panels, they're making a significant pivot, diversifying into new business segments, most notably energy storage. This feels like a real game changer.
It really does.
What new wins have they secured that reflect this strategic shift?
This is a major shift, yeah, and it's directly tied to the future of the grid, making renewables more reliable. They've secured their first standalone battery energy storage system, or BES project, 550 milliwatt-hours, contracted with NHPC.
Okay.
And what's remarkable is that the power purchase agreement, the PPA, was signed in just 1 month. That's fast.
Wow, yeah.
This isn't just about adding more clean power, it's about adding dispatchable clean power. Power you can supply on demand whenever it's needed, not just when the sun's out or the wind's blowing.
Right, the reliability factor.
Exactly. They've also signed PPAs for an additional 550 milliwatt of firm and dispatchable renewable energy, or FDR, which integrates renewables with storage, plus another 550 milliwatts of standalone BS projects. So they're really leaning into storage.
So their under construction portfolio now stands at an impressive 4,080 megawatts, all with signed PPAs, plus that 550 milliwatts of storage. Now, you mentioned government support earlier. How significant are these policies like the VGF scheme and the ISTS charge waivers in actually making these battery and FDR projects commercially viable for a company like ACME?
Oh, government policy is absolutely crucial here. The Ministry of Power's Second Viability Gap Funding, or VGF scheme, is a big one. It's got an outlay of 5,400 crores, about 65 million US dollars, right? And it offers a subsidy of 18 lakh per megawatt hour. That's roughly 21,700 US dollars per megawatt hour for 30 gigawatt hours of BS capacity nationwide.
What?
This directly cuts the cost for developers like ACME.
That's a direct boost.
Absolutely. And then there's the 100% waiver on Interstate Transmission System, or ISTS, charges for co-located BSS and pumped hydro projects. That's been extended until June 2028. That significantly boosts the economics of these integrated renewable plus storage solutions. It means they pay basically nothing for transmitting power across state lines from these projects. That's a massive cost saving.
That makes perfect sense.
Yeah.
Now, I understand the VGF subsidy itself was reduced, right? From 27 lakh down to 18 lakh per megawatt hour. Some might see that as less support. What's the thinking there? How does it still keep projects viable?
It's actually a positive sign, really, a sign of the industry maturing. The government reduced the VGF because battery capex costs, the cost of the batteries themselves, have come down significantly.
Okay. Technology costs are falling.
Precisely. So this allows projects to offer lower tariffs to the grid while still remaining economically viable for the developers. It's about optimizing the subsidy as the tech gets cheaper and more competitive, making sure public funds are used efficiently but still spurring development.
Fascinating dynamic. Let's talk practicalities then. What's the capital expenditure looking like for these standalone BESS projects? ACME mentioned around $100 per kilowatt hour for the battery installation. That seems quite efficient compared to a solar plant.
It is efficient, and the risks are different, arguably lower in some ways. Less land needed compared to sprawling solar farms, no new big transmission lines typically required for the battery part itself.
Right. And what kind of returns are they targeting for these battery projects?
They're aiming for a healthy internal rate of return, or IRR, high teens, they said, not less than 16%. That's quite attractive, especially given those reduced risks we just talked about. The capex of around $100 per kilowatt hour makes these projects financially compelling. You're essentially buying a storage solution that can maximize the value of renewable energy. Sell it when prices are highest.
Got it. Now, they've placed orders for over 3.1 gigawatt hours of these batteries with major suppliers, Murata and Trina Energy. Are they just importing the full battery packs, or is there any local assembly happening, and why make that choice?
Good question. At this stage, with large-scale battery deployment still pretty nascent in India, ACME's decision is to import the full containerized battery packs.
Okay, the whole unit.
Yeah, the whole unit. While local assembly might offer a small cost saving, maybe 5%, maybe up to 11%, their priority right now is reliability and warranty.
Makes sense for a new tech area.
Exactly. They believe getting the complete tested product from established global suppliers with a proven track record significantly reduces their risk, especially when you think about long-term performance and warranty over 15 years or more. Plus, they secure long-term service agreements with these suppliers for ongoing maintenance and support. It's a pragmatic approach, really, to de-risk a new critical technology for them.
That sounds like a smart play for risk mitigation. And it also sounds like ACME is aggressively pushing for early commissioning of these BSS components. How does that work in practice for their FDR projects? What's the benefit of getting the batteries running early?
This is quite clever. Their plan is to operationalize the battery component of their firm and dispatchable renewable plants early, specifically to generate revenue from merchant prices during peak power hours.
So before the solar part is even fully online?
Potentially, yes. Think of it like a standalone storage unit initially. It can buy cheap power from the grid when demand is low, maybe overnight, and then sell it back at a premium during peak times in the evening. This provides an early revenue stream while the rest of the plan is being finished.
Okay, interesting.
And importantly, for this partial early commissioning, the power sold from the battery does not have to be offered at the 50% PPA tariff often stipulated for early part commissioning of generation sources.
Why not?
Because the battery itself is explicitly not considered a source of generation in this context. It's a storage resource. The generation comes from the solar or wind component later, so the battery can act independently for these merchant sales early on without that PPA price constraint.
Very interesting distinction. Okay, turning to the broader landscape then, what does ACME Solar's strategy, especially this push into storage, mean for the wider industry? And how are they navigating potential risks? India's renewable sector is booming, over 12 gigawatts added in Q1 FY26 alone.
Incredible numbers.
And we hit that amazing milestone. Non-fossil fuel sources are now over 50% of the country's total installed electric capacity, 5 years ahead of schedule.
Truly remarkable progress.
However, we did see some softness in overall power consumption recently, maybe due to an early monsoon. How does a company like ACME insulate itself from those short-term demand fluctuations?
Yeah, that softness in demand might worry some players, especially those exposed to merchant markets. But Acme's business model largely insulates them. Their entire portfolio, 100%, is linked to long-term power purchase agreements.
Ah, the PPAs again.
Exactly. They have guaranteed buyers for their power at agreed prices, so their revenue streams are largely secure, regardless of temporary dips in overall demand or fluctuating merchant prices. That PPA-centric model is a really strong shield against market volatility.
That's a strong shield indeed. But for capital-intensive projects like these, financing and the cost of debt are always major risks, aren't they? How is ACME managing that, especially given the scale of their planned investments? They're talking big numbers.
They are, and they've been very proactive in what they call capital optimization. For instance, they just refinanced 1,070 crores, about, 129 million US dollars.
That's enough, yeah.
For a 250 MW operational project. They got it at a fixed interest rate of 8.5% for 5 years. That was a 95 basis points reduction in cost for that specific loan. Pretty significant saving.
Definitely.
And this also brought in new, very reputed lenders like Bank of America and Standard Chartered, diversifying their lender base. Their overall weighted average cost of debt is already below 8.5%, and they expect it to keep reducing.
Okay, so they're actively managing borrowing costs down.
Actively. Plus, they've seen improved credit ratings. CRISIL gave an A stable rating for 1,200 milliW of their assets, and the holding company is at A+ with a positive outlook. This strong credit profile is crucial. It's paving the way for them to access broader capital markets. Think mutual funds, insurance companies, provident funds for further diversification of funding sources.
Right, moving beyond just banks.
Exactly. And for their big CapEx guidance for FY26, 12,000 to 14,000 crores, roughly 1.45 to 1.7 billion US dollars, they say the debt is largely tied up. And crucially, the disbursements are synchronized with project needs to avoid paying fees too early. It ensures they have the funding ready without incurring unnecessary costs.
That's a very strategic approach to finance, sounds like.
Yeah.
Now, turning to execution risks, PPA signing delays, project completion, these can always be hurdles. We know they recently signed 550 millivolts of FDR in solar and 550 millivolts of battery PPAs, which suggests things are picking up pace.
Are there any particular projects or maybe challenges in FDR execution that stand out? Yeah, the pace of PPA signing has definitely accelerated, which is good news. For example, their Omega project in Madhya Pradesh, they say, has all regulatory approvals in place and should be signed very soon. The Hybrid 3.25 project with SCI involving Bihar and UP is also apparently at an advanced stage. ACME seems positive they can wrap up this entire PPA pipeline within the next 4 months or so.
Okay, that's ambitious but positive.
Regarding FDR execution, yeah, the battery component is new territory at scale, but it's primarily electrical work, and they seem confident in managing the regulatory approvals needed for that early commissioning plan we discussed. And remember, battery plants need minimal land and have fewer connectivity risks compared to huge solar farms. They're also apparently minimizing the wind component in their FDR projects to reduce generation variability risk and potential penalties.
And what about transmission and evacuation challenges, especially in high solar states like Rajasthan, which often face grid congestion issues? How are they mitigating those risks?
That's a key point. Acme's strategies here seem quite astute. First, they're actively diversifying their portfolio, geographically pushing into states like Andhra Pradesh and Karnataka, not just concentrating everything in, say, Rajasthan.
Spreading the risk.
Exactly. Second, they make it a point to source grid connectivity before they even bid for projects. This effectively delinks the PPA signing process from waiting for transmission lines to be ready, which can cause major delays.
Proactive planning.
Very proactive.
Yeah.
And importantly, they clarified that none of their current pipeline, the projects under construction, now depends on those really long-term, big HVDC transmission projects the government is planning. Those are more for future projects, maybe 2029, 30 onwards. So they're avoiding that immediate potential bottleneck for their current build-out.
That comprehensive risk management and strategic diversification really speaks to a long-term vision, doesn't it? Let's shift our focus then, finally, to ACME Solar's commitment to innovation and their long-term outlook. What are their R&D efforts looking like, particularly with this big push into storage?
Well, their R&D sounds quite rigorous, actually. They've apparently completed 5 full years of continuous testing on their own firm and dispatchable renewable setup, integrating battery, solar, and grid interaction in a real-world setting.
5 years. That's quite extensive.
It is. And this long-term testing confirmed that battery degradation, the reliability of their power electronics, even when connected to a less than perfect 33 kV local grid, and the round-trip efficiency, charging and discharging losses, are all well within their initial assumptions.
So the models hold up in practice.
Seems so. They've even successfully tested automatic grid interaction with their own energy management system. This kind of iterative real-world testing is vital. It significantly de-risks their big, upcoming, large-scale battery projects and helps ensure reliability and performance, especially since, as we said, the large-scale battery market in India is still quite new.
Makes sense. Any next steps on that testing front?
Yeah, as a next step, they're planning smaller-scale 10 milliW battery installations, kind of like pilot projects for further real-world testing and learning before they deploy the really large gigawatt-hour scale projects.
That rigorous testing sounds like a solid foundation. Looking even further ahead, what future innovations are they pursuing? I saw something mentioned about optimizing land usage and even perovskite testing.
Yes, these are definitely key to their future competitive edge. They're actively working to optimize land usage, aiming to potentially reduce land requirements by 15–20% for future solar projects.
Which is huge in India.
It's a very big deal, yeah. It means potentially generating more power on the existing high-quality, high-radiation land parcels they already control or can access. And then there's perovskite. They're moving to the second level of perovskite solar cell testing at a 50 to 100 kilowatt scale in the next 3 to 4 months.
What's the promise of perovskite?
The main excitement around perovskite is its potential for improved operational efficiency, particularly in low-light conditions. Think early mornings, late evenings, cloudy days. It could potentially extract more energy overall from the same amount of sunlight compared to traditional silicon cells. Still early days for commercial scale, but definitely an area to watch.
Okay, so innovation, cost focus, technology leadership sounds like the plan.
That seems to be the core of their strategy for staying ahead, yes.
And there you have it. A truly deep dive into ACME Solar Holdings. We've seen their remarkably strong financial performance in Q1 FY26, driven by solid operational growth and pretty shrewd cost management.
Very disciplined.
We've explored their bold and strategic move into new business segments, particularly energy storage and firm and dispatchable renewable energy, a critical shift, really, for the entire grid's future.
Absolutely key.
And we've also understood their disciplined approach to managing those industry risks, from financing complexity to project execution challenges, all while investing in potentially game-changing innovation like perovskite cells and their advanced BES testing. So, given ACME Solar's proactive approach to integrating battery energy storage systems and their long-term R&D in areas like perovskite, this raises, I think, an important question for you, the listener, to ponder.
Okay.
How might the very definition of renewable energy and what we mean by grid stability evolve in the coming years because of companies like this? What new opportunities might this unlock for the energy sector beyond just traditional power generation? Could it change how we think about energy consumption at home or in businesses even?
Interesting thought.
Something to think about. Thank you for joining us on this deep dive into ACME Solar's bright future. We'll be back soon with another stack of sources and more surprising insights.